Hey guys, welcome back to the Zachary team channel. This is Gabriel. Today I'm talking to Michael Kidd. Thank you, Michael.
Yes.
And today we're going to be talking about credit score. This is one of the main things that a lot of people talk about out there, and a lot of our clients always come to us and they're like, hey, I don't have good credit score, or my credit score has problems and I can't buy right now. And actually, again and again, we talk about that, and we've learned a lot of things personally that I personally didn't know before, and this is why this video is very important. We've done other videos as well about types of loans and stuff like that. We're going to link them below. Make sure you watch those. But today specifically, we're going to be talking about what to think about your credit score, or how your credit score affects you, and what you can do about that if you think it's an issue. So, Michael, if I'm worried about my credit score, but I do want to buy a home, or if I'm interested in a home, what would you tell me?
Absolutely. So again, Michael Kidd with Directions Home Loan. A little bit about credit in general. I mean, I think it's probably the biggest deterring factor, right? That people are concerned about, whatever it is, buying a car, buying a home, all of that. As far as when it comes to credit, the challenge I think we have is that there's so many different ways that we get our credit scores, right? So some people, credit like a Credit Karma or online, or they pull it through their credit card company. The frustrating part is every time you look at it through different channel, there's usually different scores, right?
Yeah.
So I'll have people call me and go, I pulled it here and it's showing this. Is that accurate? Is it not? One of the things I always tell people is there are different what are called scoring models when it comes to credit. So whether you're having a car lender pull it or a mortgage lender review it, you're going to get a slightly different score. So I always encourage people, the most important thing when it comes to start looking for a home, or even start the process of what does it take to qualify for a home, is to have a mortgage lender review your credit from their eyes, right? So that's going to give us very specific data in the mortgage industry of how that's going to apply for you buying a home. The other thing that does for us is that gives us a number of different opportunities to help, right? I have a lot of people just say, how does it work and all of that, but I don't want you to pull my credit score. Well, if we don't pull it, we have nothing really to start with, right? That's one of the main things that we use. So a little bit about just credit in general. When it comes to credit, there are minimum scores that we need for different programs. So usually the lower end of that is probably 560 to 580 range. Some programs start at 600 or 620. But again, you don't have to have perfect credit, and I think that's a lot of times people think, if I don't have perfect credit, I don't qualify. A lot of these programs are designed for people who need some help, to be honest with you. So with that being said, I always encourage, let's look at your credit first. When I review the credit, it's going to give me some direction on what I can do to help. So obviously, if it's at a position where you're ready to buy right now and everything looks great, we only review credit once every 4 months, just to let you know. So we don't have to keep going back to pull it, which I think is important. A lot of people think, I might buy in 2 months from now. I don't want to pull it now. If we have to pull it again, is it going to hurt it? We also want to pull it as few times as possible. One of the other things is we don't go back and re-pull it at the end. So again, that first credit score, if it meets what we need, then we're good to go for the next 4 months. If it's not, my goal is to give people an opportunity to move in the right direction to eventually qualify for a home. A couple different ways we can do that. So as we pull credit internally within our credit system, there are some tools that we have. So if you're pretty close to qualifying, and it has to do with maybe a balance on a credit card, or do I pay off a collection item, we do have some tools internally that we can run and provide that very specific data. Now, the really cool part about this, to not be too techie about it, is those systems use the same algorithm that each one of the credit bureaus use to come up with a score. So you might talk to a mortgage lender and says, well, pay everything down to 30%, and that'll move your credit up. But they're not giving you very specific information. The tools that we have, very specifically, I can say I need the score to be 620, for example, and it will very specifically tell me, pay this account down to this, pay this account down to that, and within a certain 95% chance that's going to occur. So I really believe in those systems, and I think that gives us a very accurate representation rather than you just kind of guessing on what you should pay, right? Again, I do think it's important to have me pull your credit first. I have so many times people call me and say, I've been working for a year to try to get my score up, and I paid off a collection and I paid down my credit cards, and we pulled our credit and they didn't pay enough, or they paid a collection and instead it being an old account, now it's a new account. So, before you spend any money, before you start guessing on what you need to do, let's look at it from our perspective. I can give you very specific advice on what to pay, so that we're not wasting your money. And not only that, we're maximizing the score with the money you're spending.
And there's a lot of misconceptions there. Like people just start taking the actions into their own hands and do whatever they want. One of the things that a lot of people that I personally talk to, that they go and do, they pay off credit cards and close them.
Absolutely.
That's a big no-no.
Yeah, so I always tell people, again, start looking at it first, but just to kind of reference that, what we find is over time, let's say you have a collection account, even there's a balance on it, it might be 4 or 5 years old. As the older it gets, the less impact it has on your score. If you go pay that to 0, it doesn't leave your credit report, by the way. Now it shows that you have a collection account that's reporting within the last couple of months. Even though it's 0, it doesn't fix the problem. Another thing a lot of people want to do is they feel like, I've got to pay everything to 0. There's really none of the programs that we use require you to pay off your collection items. The only time they do is if it's like federal, for example. And again, that's the guidance that we'll give our clients. But multiple collection items with balances, there's a misconception that people have to pay those to 0. That's absolutely not the case at all. Charge-off items, those type of things, we've never made somebody go back and pay it unless that's part of increasing your score. But there's no way to know that until we really run those numbers. So sometimes, like you said, you think you're doing something good, let's close credit cards, let's pay them off. A lot of times it could actually hurt your credit and you have no idea why it's going that direction.
And what about pre-qualification? Like a lot of people, the minute that they hear this, they kind of freak out a little bit and they're like, oh no, I'm not ready for this, or do I need this? As a realtor, you definitely need it, because it makes our job so much easier. We know what we're looking for. But from a loan perspective, can you tell us a little bit, why do they need pre-qualification?
Absolutely. So
what does it mean?
Yeah, absolutely. So pre-qualification for us, like you said, when you're going out looking for homes as a real estate agent, as a buyer, you want to know that you are qualified for the loan before you spend the time and energy going out looking. Finding a home and not being able to put an offer in on it doesn't help, right? So getting everything set up first, the pre-qualification part of that is credit. We also review income, assets, job history, some things like that come into it. We actually at that point issue what's called a pre-qualification letter. A little bit of difference between how I do it and maybe jumping online to have an online service do it is we're going to take the time to not only review your credit, we're going to look at your job history, we're going to review your income, your assets. We're going to make sure before you even go out start looking for a home that you are pre-qualified, which means that once you find that, you have a letter in hand that says that you have been reviewed by a lending institution. Every seller, as you know, every listing agent is going to require that before you put an offer in anyways. But it also makes sure that you know that you are qualified, that we are ready to move forward. On top of that, it also is going to make sure that we're looking in the right price range. So one of the questions I asked, just like buying a car or anything else, is what would you like your monthly payment to be? We're going to pre-qualify you not just for that, we'll let you know what you could go up to, but we want to make sure if you want to have a $1,500 payment that you're looking in a price range that's going to match your family's budget as well. All of that is part of that pre-qualification process that we do. And again, we do have some online applications and things to start that, but I'm always going to follow up with a phone call to go through that and make sure there's not any additional information that we need to know to factor in there as well.
Okay, so going back to credit score, we discussed whether you qualify or you don't based on your credit score, and in most cases, just like you explained, it's very easy to qualify. But what about like the other implications that the credit score has on your loan, whether the amount that you're going to get or the interest rate and all of that other stuff?
Correct. So yes, credit is one of the determining factors of what type of loan, whether you qualify. It also has an impact in the interest rate that you have, which obviously impacts your payment. Each different loan type is a little bit different on how credit impacts it. There's minimum credit scores. Ideally, you'd like to be above those minimum scores. The higher your score is, usually the better the interest rate is. Now, there are certain boundaries that you go above. So once you're above about a 720, 730 credit score, whether you're a 780 or an 800, you're going to get the same basic profile. Where it really comes in more into impact is the lower credit profiles. So let's say you're below a 600 or in the 620 range. That's really where we want to make sure that we're reviewing the credit and placing you in the right program to where you're getting the best interest rate and the best payment that is associated with your specific credit profile.
Yep.
Whether it's FHA or conventional, that's probably one of the biggest determining factors is your credit, your debt ratio, all of that comes into play. But a little bit stronger credit score, sometimes we lean more conventional. If it's a little lower credit score, FHA, you're not as impacted as much with a lower score.
Yep.
The credit itself and then the mortgage insurance factor there's no implication on that when it comes to credit score. So again, just from my industry experience, that's my job to present those side by side to see which one works best for your entire profile, including
and of course there's a discussion, like you talk to them, you explain the situation, you let them know like how you reached that conclusion. There's
Absolutely
an education process. Okay, one more question,
Sure.
and I'm gonna let you go. I know like I went overboard here, but what if like all right, so let's say I don't have that nice of a credit score, I can qualify, but if I can wait a little bit for a while or work on my credit score a little bit, I can get a better price or a better rate or something like that. Is there, would you advise that, or would it be better to just go ahead and qualify and start the process, and then I can continue working on my credit score, and then maybe can I revisit my loan again in a later stage, because right now it's a good period with the interest rates
Absolutely.
at this point, so maybe it would be better for me. So there's a lot of factors. That's something also that a lot of people don't think about, that they think they're stuck. Once they get that loan, they're stuck.
Right.
Whereas most people don't stay in their home more than 7 years. You know, it's not like a 30-year commitment like a lot of people think. So, and a lot of people get like refinancing and stuff like that. So what do you think about that?
Sure. So I'm a huge proponent that knowledge is power. So the sooner we can look at your credit, the more opportunity we have.
Yep.
Don't talk yourself out of qualifying before we know that you qualify. I'm just a real quick story. Had someone that kind of in that situation. They were very anxious for me to review their credit. They didn't want to buy until they had perfect credit.
Yep.
Convinced them, like, let's look at it now. We looked at it. It was about a 680 credit score. In their mind, they thought they had to be above a 700.
Yep.
We looked at this scenario, and the difference between a 680 and above a 700 for their type of loan was zero. They were going FHA, and there was no difference in pricing between those two. So they were going to hold out thinking they had to be above a certain threshold. They weren't aware that there was no pricing difference for that type of scenario. The other thing that I will say is, if you are concerned, and obviously everybody wants to get the best rating, if I review your credit and you're near the next threshold, so let's just say a conventional loan being above 700 is better than below, I've got the tools to help you do that. I can run the tool and say, you're at a 690 now. What does it take to get another 10 points? I can give you, again, some of those pointers with the tool that I have to help you get there faster than you could probably guess on your own to get there. So again, my advice is always, let's look at everything now, and then with that knowledge, that helps us build. It might only take a week worth of paying down a few credit cards to rescore your credit. It might be something that you are looking down the road. I have a lot of people call me and say, I'm looking to buy at the end of the year. What would you recommend? I recommend looking at it now. Let's make sure there's nothing on there that's going to get in our way, maybe no surprise medical collections that impact you. The sooner we look at it, the better we know. If nothing else, we're saying you're good to go when you're ready to buy. Let's don't change anything and everything's going to work at that point. So absolutely, waiting sometimes you get surprised. I'd much rather look at it now, and it gives us time either to make sure we keep things the way they are. If we need to improve them, I can definitely help give that guidance as well.
Awesome. So there you go, guys. You heard it. Start the conversation. You've got nothing to lose. Knowledge is power. Thank you for watching so far. This is the Zachary Team channel, and I'm Gabriel with Michael Kidd. All the information is going to be below. And like, subscribe, send us comments, let us know what you want to watch next, or if you have any questions, reach out to Mike directly or to us.
Absolutely.
We'd be more than happy to answer all your questions. Thanks.
Thank you.